All right, folks, welcome to Masterclass. I am David Russell, VP of Market Intelligence here at TradeStation. I do these every other week. Good to be back with you guys. We're getting started. Let me quickly add, let me give you these links. We have some new stuff, giving you guys some new things. Look at the zip, let's see. Hopefully this came through correctly. I'm not sure if it did. Sorry. These are 3 new things that we have. Well, 2 new and 1 is the same that I've had from before. So if you guys want to start checking those out, the downloads here. Okay, all symbols and trading ideas discussed by the instructors are for demonstrational purposes only and are not recommendations. Strategy trading and active trading is not suitable for everyone. Futures trading, option trading, and active trading is not suitable for everyone. Past historical performance does not guarantee future results and may not be indicative of future performance. All educational content and custom easy language studies provided are examples for educational purposes only. Neither TradeStation Group or any of its affiliates suggest or recommend trading indicators, scan strategies, or any other investment or trading advice of any kind. You alone assume any trading risk associated with the analysis and trading examples provided. Okay, excuse me. All right, folks, so it's great to be back with you guys. So I have created a new set of tools that I'm working on, and I'm going to show some of those to you today. First, I want to just run through some overall things. Well, first, when you open up, all right, so there's 2 things I gave you. This is the old one, Masterclass November 2021. This has 5 workspaces in it that I've shared with you many other times. If you don't have it, double click on it. Make sure you open the ELD files and import the studies before you open the workspaces. Next, I have Masterclass September 2022. This has another indicator, another ELD file with some interesting new indicators I'm working on with the help of our easy language team here, along with 2 workspaces. These I anticipate, this one is actually called an Art of TS, it's going to be a future Art of TradeStation. Art of TradeStation is a bigger webinar I do in the afternoons once a month. The next one is coming up middle of October, about earnings season. So this is a future Art of TradeStation that's not yet completed. So I wanted to share with you guys first because I have the basic functionality working. My next Art of TradeStation is October 12th at 4:30 Eastern, if you guys want to put that in your calendar. So we have this new ELD and then 2 new workspaces, and I have them all loaded up down here. So let's take a look at this now. Well, if you want to load those, I want to just run through a few points. As everyone knows, the Fed meeting is tomorrow. And, we have a lot of, expectations for, if we look at, rate hikes, look at the Fed's, the CME Fed Watch tool. It's become more popular as everyone looks at the Fed. And I think it's interesting if we look here at like December, what we can see is that we're now looking at pretty much 4.5 by the end of the year, so that everyone expects, which is 200 basis points above where we are now. So, if you look back a month ago, we were at, so we've basically gained an entire 75 basis points of hikes that are priced in. And that's obviously a hawkish thing, and it's, a bearish thing for the market. However, I do think it's important to realize that, we're at a point where a lot of this is known, and we're looking at levels of negativity that are really extreme by any historical measure. And I just thought a few things. I'm not saying that right now this is exactly where the market bottoms or anything like that. But if you look at these surveys from like the American Association of Individual Investors, you're looking at things that are, during the entire meltdown of 2008, this never went below 20 in terms of the number of people who were bullish. At that point in time, we had 7 or 8 months of shrinking job of non-farm payrolls. This year we've had growth pretty much every month. So we're looking at something that is, very different. We're looking at a situation now where we have very little debt in terms of, the ability of the bottom to fall out like it did with Lehman and the mortgages. So, you're looking at an environment that is just not as structurally bearish. You have the Fed, which is this big thing that's there, but at the same time, the underlying conditions, as I've said, I think are some of the most positive that we've seen in most people's lifetimes, whether you want to believe it or not, in terms of the structural job growth, the health of balance sheets, and the overall aggregate demand that's in the economy. And I think that's, from my perspective, those are some of the bigger picture things that remain in effect over the longer run. Let me state, over the longer run. So, I think that when we get past this extreme negativity about the Fed, we have the pieces in place for, some interesting, longer term sort of opportunities in the market. And I think, that's something I think we do want to keep our eye on. And the main reason, if anything, is if we start to get a rally and a breakout from this, it might basically suggest that trying to fade that could be not a great idea. So I want to just put out that structural case. I've made it before, but it pretty much remains in effect. And the bigger point is that we have a lot of this negativity that is now known, and it's simply a question of, do we get a kind of they sold a rumor, now they're going to buy the news. Let's see if that is the dynamic that plays out. So if we look out, we do see some other interesting things that have been popping up. One of them today was, for example, Ford Motor, really bad warning on their supply chain issues. FedEx, very bad yesterday, or if last week. But at the same time that's happening, I think there's some other things that are, in some ways, even more interesting. So if you look over on Market Insights, this is on, if you go to tradestation.com, and then you go to this research, and you go to Insights, that's how you get to my blog. So if you look back here, we did an article last week about really a massive structural shift in the options activity in Apple in a positive direction. We started to see real structural call buying, which was pretty interesting. Now the stock got smashed lower, but now if we take a look, there's more people. There's this guy at TF International Securities who has been kind of a real iPhone, geek, and he's saying the exact same thing that we cited in this article, last week, which was that we're seeing the mix. I wasn't the one who said it, who several analysts. So I noted this at the time I was reading. Bank of America had a note. Several people, Morgan Stanley, I think, was in here. If you look back, you can see some interesting sort of things happening in Apple in terms of the demand for the newer phones and what it's going to mean for profitability and everything else. So that is, I think, something that remains in effect. Today, it's getting another one of these bumps. So, interesting to see this with a name like Apple. Now, the other thing that grabs my attention is Tesla has had some really interesting news as well. I want to point you guys to this. Go to YouTube and watch this guy, Tesla Daily. There has been a stream of positive news of Tesla increasing production at their various factories around the world, fixing their supply chain issues. It's pretty interesting. Now, where are we? We're on September 20th. Well, what is that? That is about, 12, 13 days away from Tesla reporting Q3 deliveries. So from my perspective here, when you look at the way Tesla is holding, this is it's pretty interesting. Now on TradingView, we also did an idea about this. Now you guys may or may not remember that I write these ideas over on TradingView, which is an outside API partner that you can link to your TradeStation account if you want to do that. It has a monthly subscription cost and things, but it's just another tool, because there's a lot of just, everyone wants different ways to access their money, and that's one of the things you can do with TradingView. You can actually trade through its charts. If you want to do that, I mean, I love the TradeStation platform, so I wouldn't do that, but I still like their community. It's kind of fun to post ideas here, and we outlined some pretty interesting things in Tesla in this idea today. And I think, to me, the thing that's really interesting about Tesla is look at how much it's rebounded. And when the market took that beat down after the CPI on the 13th, I mean, Tesla, look what it did. It just didn't do anything here. So to me, this is squeezing up to these levels, and it's extremely sort of interesting just to see that squeeze happening in Tesla right now against these highs. And with those numbers coming in 2 weeks, I mean, from my perspective, there's a risk of, this thing escaping to the upside. So I think you can talk about FedEx and Ford. It's interesting. I'm seeing these articles on Yahoo Finance, which to me is always kind of like not a great, I mean, they're not really a particularly good, I mean, it's kind of like real common lagging indicator level of a news source. And they have all these articles about how Ford and FedEx are the new wave of bad earnings and blah, blah, blah. And they can say all that, but at the same time, you look at the people, you look at some of the information on Tesla and Apple, which together, are much bigger than FedEx and Ford in terms of market cap. And there are things that seem to be kind of brewing beneath the surface. I also thought it was interesting to show you something really quickly I've been doing with, well, this chart has RSI on it, and that's one of the things I'm going to show you. But first, I just want to mention that we've seen multiple times when RSI starts making higher lows, that the market will, it's the beginning of a bullish divergence, and we're starting to see it right here. So I wanted to just kind of mention that we're seeing in the RSI on the S&P 500. All right, another story we did recently was the idea of peak hawkishness. Now, let me be clear that the most important thing in this article was how I ended it. This was after the Fed's July meeting. What did we say at the very end? Winston Churchill in 1942, this idea of it isn't the end, it isn't the beginning of the end, but it's the end of the beginning. So my point back here in July was that the swinging toward the extreme, toward the Fed going to their maximum hawkishness had pretty much happened. It doesn't mean that they're going to start getting dovish right away. And as we've kind of seen from this, in the month since I wrote that, we went from basically 375 to 450, for the December rate. So it's not to say that the Fed is going to go dovish anytime soon. But the thing is, we're getting toward a point here where the Fed has said it's 75 basis points multiple times. They've kind of put that out there. They're all talking from the same playbook. And so I think right now we have to realize that the beginning of the hawkishness, which was the Fed going from, well, maybe we'll raise 25 basis points a few times, to we're going to raise 75 basis points every meeting, that transition has occurred. And now we're at the point where the market is accepting 75 basis points, for multiple meetings out into the future. So the thing is that we're at that point now where we've had that acceptance phase. And so I just think it's important to realize that, because a lot of this year really was, we were in denial. I'm not sure these stages, is it the stages of grief for the addiction thing, but you go from, denial to acceptance to change or whatever. But I think that's the thing where people didn't believe the Fed was going to be this hawkish, and now we believe it. But now the thing is, everyone believes it. Now Yahoo Finance is saying that everything is terrible and the Fed is going to destroy the stock market, and everything else. I mean, if you look at these articles on Yahoo Finance, it's pretty interesting to see the Fed is not your friend right now, something like that. So as this becomes more mainstream, it's like JP Morgan said when he started getting stock tips from the shoeshine boys, that was when he started getting nervous about the stock market in the 1920s. Right now I kind of view Yahoo Finance as the shoeshine boy. And I look at the stuff on Seeking Alpha, and some of these analysts as being more, if anything, the leading indicators. These guys like Tesla Daily, I've been really impressed by this guy. I mean, he's getting all kinds of information that like other people are just overlooking. And it's all based on legitimate stuff. This was based on a Goldman Sachs appearance. There was some kind of Goldman interview. The guys, it was the guy who's investor relations or something from Tesla. Just check out some of these videos, but it's pretty interesting because Tesla has been putting out real information that has not been getting a lot of attention. But I just think you got to remember those shipments come in 2 weeks, the delivery data. So, that to me is something that is interesting here. All right. Another thing that's jumping up for me, and I don't want to be like overly, kind of like trying to be overly bullish or looking past anything. I mean, from my perspective, we have a lot of bad news. We have to kind of sit and wait to see what happens after the Fed. But my belief is still that I think we have to be careful of getting the risk at this point is that we get a squeeze. And if that happens, I think we just have to remember that that could turn into a multi-week sort of thing. And if that happens, we also are still looking at a higher low, which could be something pretty interesting technically as we go into the fourth quarter and as we go into earnings season with, of course, a huge amount of negativity. And then what happens if it's not as bad as people think? So I just think we have to realize that we might be we might be near the darkest moment of sentiment of this bear market. And some other people say this as well. I think there's interesting people like what's his name? The guy, that old guy who goes on CNBC sometimes, the professor at Wharton, Jeremy Siegel, this guy at JP Morgan, their Kalanick was his Marco Kalanick, their big quant guy. He is pretty much saying the same thing. So there is definitely a negative thing to view, but there is an increasing number of strategists who are pretty credible, who are leaning in this direction. And so I always kind of want to look out in that direction. I should admit, I have a tendency to be early. I was starting to see bearishness back here, and I was early with it. But I think at the same time, that's just the case and the information I want to lay out to you guys. All right, now what's also interesting is, like I said, I don't want to be overly bullish, and there are definitely some areas in the market, like I think semiconductors, lot of trouble in some of the semis and things like that. And I do think when you look overall at things like interest rates are not going to come down all that quickly, and that is going to be a problem for companies like Microsoft and the semiconductors. So I just, I do want to, be clear in that. However, what is interesting to me is that we're seeing more and more interesting price action in the travel related stocks. So last week, if you look on Market Insights, some of the biggest gainers were the cruise lines, which is kind of interesting. It was a bad week, and we had upside in Royal Caribbean and Norwegian, and also Wynn Resorts, which is interesting. So we're seeing now some of these, Las Vegas Sands. What's also interesting to me is Airbnb has been trying to kind of stabilize here. It's pretty interesting. Look at Airbnb, Expedia. The guy from Expedia made some very bullish comments recently. Now, obviously, these charts long term are not bullish, but if you look at them over the shorter term, interesting that Expedia is holding its level from earlier in the month. Airbnb is holding its level from earlier in the month. The S&P 500 is under its level from earlier in the month. So these are the ways that relative strength starts to emerge. And it's interesting to see it in the cruise lines and in the travel service things like Expedia and Airbnb, which are in their own way, even though they're totally different, they're very similar businesses when you think about it, what they represent in terms of the market demand for travel. Okay. Another thing we've been writing about that I do think is important is, can you please post them again? I had trouble getting, all right, here we go. These are, we created a new disclosure page you want to check out if you want to see the prospectuses and stuff, which, I'm not going to talk about the ETFs all that much, but some of the workspaces I've shared use ETFs. We have this new thing with the disclosures. If you want to actually go and read any of these prospectuses, they are going to be available here as part of Market Insights going forward. It's just a page we added to the blog. All right, so in terms of energy, now it's interesting because there have been some interesting things happening, I think, with these different ESG and renewable energy names. So we looked at, for example, this was a big thing we did on lithium. And And some of these stocks have been ALB and SQM have really been outperforming. When we wrote this, it was like ALB was like around here. It had that nice jump from 260 like 300. But again, this is one of the few S&P stocks that's near 52-week high. SQM, another lithium producer. ENVX is a battery maker. This company, ENVX, FREY is another battery related name. And then the other one that's been popping up recently has been STEM. We've written about these in different ways. I'm actually thinking of creating some kind of green energy category or something on Market Insights. I'm not sure exactly how I want to organize it, but that's coming as well. But I want to just mention that at this point, I think we have to. I would be wary of being overly focused on these names at this exact moment, because if we do get a big structural rally in the market or a drop, whatever, but if we do get a big correlated move, which is likely to be what we're going to get after the Fed. It's not going to be just a few stocks here and there. It could be the whole market goes up or down. These something like these ESG theme will not make sense in the near term. However, once we get past the correlated move, these stocks remain interesting in a lot of ways. One of them is the fact that they have had some remarkable relative strength. If you look at the fact that these guys are kind of near where they stand versus over the summer, they have been under apparent accumulation. And the other thing is that most of them are not in the S&P 500. They're not historically owned, which means that money coming to them is newer money. They're not companies that people have owned for years. And that also creates a different sort of potential for them. So I wanted to mention that. I think we want to continue to look at this, and we're going to continue kind of scanning through some of these and writing about them. At this exact moment, however, I don't know if there's a whole lot going on with them, but we have written about them, and we're going to be writing about them more. Those are the names that I had seen so far that were interesting. The other one that I think we want to keep our eye on is going to be Plug Power, which has that relationship with Amazon. It's just kind of sitting here after this big move, and I think there's another one we want to just have on our list. A few other stocks popped up recently. Now, if you go to the masterclass workspace that I've shared with you before, and you go to your MA tools, we have this thing that allows you to see stocks where the 8-day EMA is over the 21-day EMA. This is my MA cross bar since SMA EMA indicator. And what you can do is you can basically set a fast and a slow moving average. It can be simple or exponential. And then what it does is it tells you how many days since one crossed above the other. Negative means that the 8-day is below. So something like this, if you look, we're looking here at the blue and the gold lines on this chart. That's the 8 is the blue fast and the gold is the 21 slow. And basically, so for this, it has a negative 70 reading on this stock, which is a Cincinnati Financial, whatever. It's some insurance company, I think. That means that the blue has been, that the fast has been under the slow for the last 70 days. So if we sort it the other way, we see stocks that have been more in a bullish, and then we have a solar stock right at the top of the list. And you can see that this blue has been over the gold on this one for 79 days. So what I did was I looked at just stocks that were in a positive configuration. It's not that many in the S&P. If you look, we have, you can see we're only partway down the list. So I just looked at some of these, and some of them are kind of interesting. I want to just quickly mention. One of them is McKesson. This is, honestly, this company it's pretty interesting when you actually look at some of their results. They've shown some real business improvement, and very boring stock that no one talks about. I think people might. Then maybe they should. This is sort of thing that CNBC, once it's up 1,000%, CNBC will tell you it's a great idea. But we've been looking at this stock in different ways, and this has been popping up on my TradeStation tools all year, and mostly because it was hitting new highs when the market was tanking, and that was pretty interesting to me. It's run a lot. But I still think it's interesting. We have this interesting pullback on it. Now, this one popped up for me. I can't remember why. I think it was because it had recently hit a new 52-week high and it was down a lot. So this one actually is not from the 8 and 21 day. But this was one I just popped up on my list. The other ones All right, so let's see. I wrote down some tickers and I'm not sure how I came up with all of them, but Vertex, for example, this is another one. All right, so these were ones that where I did was, this was based on price grid, days since 52-week high low. So what I do is I have a scan that looks for stocks that recently hit 52-week highs that are down in the last week or the last month. It's something like that. And I just go through and I write them down, and then I come back to them, and I keep notes for you guys because I might have seen this a few days ago. But these are stocks that recently hit 52-week highs and lows, and this is with the Masterclass days since 52-week high low under the price grid of Masterclass Workspace. And you just see these are going to be stocks now that have been hitting new highs. And then the nice thing about that is what you can just do is you can say, I only want to see stocks that made a new 52-week high in the last month. So you can just go here, you can go to data, add a label row as a break or something like that. Then you can sort them by 5-day change or 10-day change. And these are going to be the stocks that recently hit a new 52-week high, but are down the most in the last 2 weeks. So, I mean, a stock like that, to me, that's not the sort of thing we want to look for. We want something that's maybe down a few, like this, when it's kind of easing back. Maybe not. I mean, this is interesting, but the short-term momentum is still pretty gnarly on it. Maybe you look at something like the 5-day. I just kind of look down these and try and get a sense of what's coming up. And here we have another, this lithium stock, ALB, Alta Salon, this is actually the sort of thing that looks kind of interesting. So I was just running this scan and I came up with some of these names. McKesson was one of them, and another one was Vertex. We just had a lot of interesting news, and it's interesting how it's squeezing near these highs. From my experience, that if the market starts to advance or rebound, the stocks like this that are sitting near highs when the market is getting hammered, these are the stocks that tend to outperform. And so these are some of the names I think we want to kind of keep on our list. Some others, just another one, and this got a lot of news at the time. The chart is not that great, but Gilead had a big news event back here. It was some kind of drug they had. I don't remember what it was now, but this is one you might want to take a look at as well. The 8 days over the 21-day. That's how I found it. Another one that is interesting is Keysight. Now they do this 5G installation and testing, technology. And it had a really strong earnings report, and the 50-day going above the 200-day. And you look here around this 162 level, it's kind of, that was the low here, that was the low here, holding the low again. It's not exactly, but this has been a level on this chart. So Keysight was also popping up for me. The other one that was interesting was Palo Alto Networks, PANW. Another strong earnings report, pulled back. So this was potentially interesting. The other ones that has popped up to me, these are two others I'm going to mention. Netflix is kind of like Apple potentially. They're just this kind of quietly sneaking to the upside. And they have some news. They are launching a new ad-based service. This stock has been just destroyed. And now they have the potential for a new business model. And now, we have outlined in previous webinars, if you go to my blog and you see why stocks move. This is my series on why stocks move, and one of them is business transformation. So I got to go back and find. I have one page where I consolidate all these, but there's 7 catalysts for stock movement, and the main ones are just volume growth and margins, things like investor rotation and macro trends. But one of them is business transformation. When you go from one business model to a different business model, and Netflix is in the process of doing that, and it's interesting to see this price gap here. So this is something that's kind of interesting to me. It's also interesting to me that Amazon has kind of retraced this entire move since its last earnings report. So it might be something that it's just kind of interesting to see that they've retraced that entire rally. So, the near-term momentum also not great on it, but it is, still, the numbers have been strong, and this company has, um, you know, the last earnings report was quite impressive from Amazon. So I want to just mention that they've kind of pulled back that entire rally. Okay. Now, so what are we looking at here? I've got a bunch of new tools that I've been working on, and one of them is this thing I call RSI Pass. And I actually published this on TradingView today. If you actually look at um, the scripts on TradingView, this does a thing, and I have it on. I've shared it previously, but I'm gonna give it to you again. So I basically did this. It's the same thing. It's just coded on TradingView, and this is here. So RSI Pass. I shared this with you guys in the zip file that I gave you today. What this does is when a stock hits and it really Apple's the kind of showcase for it. What I've noticed is when a stock hits an overbought, good stocks tend to get overbought, and once they go overbought, it tends to signify that they're under accumulation. Now, when I say overbought, I'm talking about the RSI. Okay, so what this does is this is a derivative of RSI. Wilder's relative strength index, is typically used as an oscillator where you sell overbought and you buy under oversold. And it works actually on a short term, like a 5-minute or a 1-minute chart if you're day trading. But I've actually noticed that, and I'm not the only person who's noticed this. A lot of people have talked about relative strength. So like a stock that's doing well will make a kind of higher low. It won't go all the way to that 30, which is the oversold kind of threshold. And what's interesting is I kind of developed that into an indicator. And the thesis is when a stock hits overbought, you look for it to remain bullish. Now, it's not always like that simple, but the basic idea is that if something is doing well and then it starts hitting oversold, then that basically means that the party's over. So let's take a look at Meta. Last year, the old Facebook, it went all the way back here when it was around 345. It went to oversold on RSI, and it remained there ever since. Look at the NASDAQ. It went to oversold basically in January and has remained under pressure since. Now look at something like ExxonMobil. It went bullish back here in October, and it has had very limited pullback since. I mean, aside from after a huge overbought rally. So the bigger point is that if you can judge something by its last RSI overbought oversold reading, and then you can remember that weeks into the future, weeks after the reading happens, it can then be used as a directional indicator. So what this means is it hits overbought right here, and then this thing turns positive. And every time it hits an overbought, that it basically will reset and it will go higher. So what it does is it takes the date of the last oversold and it compares it to the last overbought, or the other way around. It starts with the date of the last overbought and it subtracts the date of the last oversold. So therefore, if you're a stock like Meta, your last overbought was here and your last oversold was here. So that's why each time it hits an oversold, it goes lower. One of the reasons I like this is because there's a certain point in time when you can see how long in the tooth something is getting. If it's been just horrible forever, then it's not necessarily bullish, but it tells you that the trend is more extended. But then at the same time, when the trend begins, like we saw here with something like Exxon or something, it means that you maybe want to stick with it for a while. I'm trying to think back. If you look at some of the metal stocks, for example, like this went to an overbought condition here, and then it kind of gave you the kind of continuing there. And basically then when it went bearish, it basically hasn't done much since then. And this was just a weird little thing, but from my perspective, that kind of after that, in fact, this has remained an overbought all the way along. It's remained positive ever since. The basic thing is, if you can see where that last reading was, that is a directional indicator, and that's what RSI Pass does. So I wanted to mention that. That's one of the new tools we've given you guys. Now, the other thing I want to talk about was rate of change. That's actually our top story today. It's just a little kind of lesson on using rate of change as a divergence tool. We use AMD. Now, rate of change, simple chart here. It's interesting how it has these different patterns where, for example, right here, it was making lower highs. So this is an interesting thing you want to, potentially look at. It can give you clues as to where the turns are going to be. It can, very often you're going to see with any move is that the rate of change will slow dramatically before the turn occurs. We explain it. We use AMD as an example, but it's a nice indicator and it works pretty well. And a lot of people don't always think about it, but it can be used very effectively to spot divergences. So let's actually look at some of these newer things that I've been creating. I call it 4-chart futures, and this is for the S&P. So I have this other thing called ES charting. And what this essentially has is this has 2 charts. One of them is the S&P 60-minute. It allows you to kind of see this is a cash index, and it also combines it with the futures. And what you often kind of see is, the approach that I have with this is that there's on this futures chart there's 3 signals. There's MACD, the direction of the 50-hour is an hourly chart, the red line. It is plotted here with MA speed. And when it's negative, it means that the 50-hour is falling, and then overbought, oversold. So, for example, last night, you basically had an overbought condition. I'm just looking, this is the overnight when I don't even really, think anyone really cares about it. See that this had actually slightly turned positive, but it's kind of like this not hugely significant reading. I'm trying to see the last time this gave a good reading. So this was an overbought condition. This is an example right here. At this spot where my cursor is right here, this is a good bearish signal. Why? Well, stochastic was overbought and the 50-hour was falling. So 2 of the 3 signals were signaling bearish, and it did actually drop in that time from, this is an overnight reading as well, but this just kind of shows how it's intended to be used between like 3,900 down to 3,850. So it dropped like 50 points after that. I should note that one of the other things that's interesting is we also have on here the outside bars. And when you see these outside bars and you're at something of a range, it generally means that you should look for it to move away back into the range. So in this case, it had kind of come up and had lots of these outside bars, which is a bearish signal. In this case, it had come up and it had outside bars, which was a bearish signal. And in this case, we actually have an outside bar right here, which is kind of like a potential bullish signal, even though it's a bearish outside bar. I've noticed that very often these outside hourly bars, will give a reversal pattern. I should state right now that none of this looks very significant to me. I'm just kind of showing how it works. The last significant reading I would say would have been something like this one. And then I'm trying to see for other times. You can see here that once it broke under this 50-hour, that actually was a pretty good signal. And then I'm just trying to see where we had other real readings. Not a lot on this, but this is a preliminary one that I've created and shared with you guys for a while. I've created this new one called 4-chart futures. So this has 2 of the same things. It still has your cash index with the hourly, so you can see some basic levels. I like this because this is the same as the other one, but I've organized it a little bit better. You can see we go up, and you can see very clearly you have these lows here, and we went up and smashed down. For example, if you go out somewhere, it's also interesting to see this low. See, so this is how I use this. You can see it goes up, hits these lows or highs or whatever, and you can see levels pretty clearly, and it's not polluted or muddled by moving averages and overnight price action the way the futures chart is. The futures chart is good for some stuff, but not for everything. All right, so I've added two new charts. One is the 4-hour S&P futures with rate of change. Now, this is actually a very interesting sort of thing. And if you look at this, look at rate of change here. Bearish divergence. These are lower, boom. That was a signal right there. It's also interesting right now you're starting to get some bullish divergence on it, which is interesting. Of course, the Fed and everything, you have to be careful. Again, right here in June, bullish divergence right before the market bottomed in June. So this is interesting. These are 4-hour bars. And I've noticed that 4-hour bars with the futures and rate of change can be a useful sort of approach for spotting divergences and stuff. So that's interesting to me. And then you just shrink it back down like having these 4. The other one is now a daily chart of the cash index. This has 2 other indicators I've created and shared in the latest file. In fact, I'm going to give it more data. I'm going to go to edit symbol 2 years back. Why is it not showing more data? Let me see. There we go. All right. So what are these things here? I've told you this thing before, MA streak, and this counts the number of days that a moving average is moving in a certain direction. And in this case, I like to look at the 10-day. And what I've noticed is there's a principle, there's a basic pattern or trend with the S&P 500 that the 10-day moving average simply cannot move in one direction for a long time. And you can generally judge that by looking at the history. If you expand it, if we change this to something like, let's change it to like 15 years back or something. If you actually look at this, you can see that there are kinds of generally when it's rising for more than kind of like 25 days or something, it generally means that it's a point when it cannot just keep moving. It has to kind of rest. And so I often find that this is something of like an oscillator, that when it gets up to a point when it's been moving in one direction for 20 or 30 days, I kind of just start to doubt the move. You do get a few moves like this that are real outliers, but for the most part, when you see it when these peaks start getting up to these higher levels, it generally tells you that you're in a point of a general kind of extension of a trend. Now, this is a tool that I completely invented. It's a time-based more than a price-based, but I found it to be a good kind of common sense thing to take a look at and just know. Another one is the distance from the 10-day moving average is also something of an oscillator. And what you can see is it can reach real extremes. And you look here where we hit this peak not that long ago. This was at historically high readings above the 10-day moving average. If you kind of look here, and those kind of marked highs. So I just think it's interesting that these two tools with the 10-day simple moving average on the S&P, I've talked about it before, but now I'm giving it to you in this workspace. It can be a pretty useful sort of thing to judge mean reversion when something is too extended in one direction. And I always like to use this as a kind of sanity check. So for example, you don't want to chase this, for example, because it's at this high. And what will often happen is even when the market's like rallying and doing well, and it jumps up to something like this, is that very often you're going to get some kind of consolidation and better opportunity, even if it's kind of just very short term. So just wanted to kind of show you this is it's just a good kind of rule of, I found it to be something of a useful, like kind of little rule of thumb, but it's not a hugely, meaningful signal in and of itself, but it can tell you when you're in moments that are outliers. Right now, we're not in any kind of outlier moment. Right now, we're in a very average moment. The 10 days been, kind of moving sideways. We're pretty much close to it within normal history. So there's no signals coming from this chart right now. Now, I've also created a day trading workspace. And so this has some interesting things that I want to share with you. So with day trading, VWAP, volume weighted average price, can be pretty. Did you give us indicator MA speed in the past? Is the question. If I didn't, I could, I will. Do you need it? Tell me if you need it and I'll dig it up for you. It's a pretty simple one. It basically just looks at the today's moving average versus yesterday's moving average. And then it does a percentage change. I'll just do it really quickly. Go to add study. MA speed, edit easy language. I'm not sure. This might not be totally perfect, but see if you can make that work. Okay. I'm going to keep my easy language open because there's some interesting things in easy language that we can do here with these. You guys might not realize this, but you can make TradeStation talk to you. It's pretty cool. And what I often do is I have it running on another computer, and then it can tell me when things start happening. So that is the purpose of this. Let me actually now show you what I'm doing. Go to View, Messages, Message Center. Okay, so I'm developing this still, so it's kind of ugly. But what I did was, this is doing a few things. If you can read this, it says Lucid cross back over the lower VWAP band. And it just happened. So let's see, LCID. So I don't know much about Lucid. But in theory, this is a buy signal for day trading, not for this stock. I mean, I just threw in the whole NASDAQ 100. So what this is that you have the volume weighted average price, and then it projects these bands on either side. So historically, the way TradeStation has typically worked, this is only available in charts. But what I did with the help of the easy language team was I turned into a radar screen. So what it does is it's going to basically take the VWAP, and then it's going to, what I actually did was, I'm not showing the bands for the VWAP. Those are included in the code. So I gave this to you guys, VWAP RS tools. Go to, if you want to look at this, and you can actually see what I did was, I actually removed plotting because I didn't want to waste space. But what it does is it will take the bands and it will use it as a range. So you can then find stocks that are near the top or the bottom of their VWAP bands. So for example, Ford Motor is at the very bottom. Let's see, JP Morgan. I don't know, for some reason it's not plotting. It's not finished. But look at like Occidental Petroleum. It's nearer the high. So the idea is very often what stocks will do, and when you're day trading, is it very often, look at like SPY here. I mean, look at how basic, this is IWM, this is the Russell. I mean, it basically goes between the bands. This is, something that when I've started doing this with day trading, I was able to, be more consistently profitable by simply trading these bands. Like I said, you have to watch them, but by putting it in the radar screen, you can actually see when stocks are at the top or the bottom of the bands, and you can make it actually send alerts. So one of the things I did with this was, it's very simple, but I changed the alerting. And by the way it works, it will just say alert. And then it's like, well, thanks a lot. What stock am I? It doesn't tell you the stock. So you get a bunch of these. Well, if you have to go to Message Center and it will tell you the stock, but the alert that pops up on your screen, or if you make it talk, and you do that by going to alert, and then you go to, if you go to this, and then you go to alerts, and go to alerts, you can make it go to configure. You can go to custom settings, and then you can go to configure, and then you can say, you can make it audible, voice, and it will read the message that comes up here. So this would say, for example, in Starbucks, it would say S-Bucks cross back over the lower VWAP band, and it will actually say that. And if you have the speaker turn on your computer, it'll just start talking these things. So this happened at 12:40 on Starbucks. Let's see what happened on Starbucks at 12:40. So it tried to bounce at that level. It failed. And I mean, honestly, like, to me, I don't really care about Starbucks. It's not a day trading stock, but those are some of the signals. Huh. It just said something to me. It just talked. Anyway, it did it on Mondelez, MDLZ. You know, it tried to cross back over the band. So what I did was I put in the entire NASDAQ 100, and I just had it start spitting out alerts, because I literally wrote this yesterday, because I wanted to have it ready for you guys today. And this is the beginnings of it. So you can mess with it. But what I basically did in this easy language is, so this is a symbol. This is the variable of the actual symbol, right? And when you see it, this is this part, and then this is the message. So what it does is it combines the symbol in question with this message. And this is some other things to manage. A lot of this I just copied out of existing things, but this is kind of interesting because what it does is it allows you to capitalize on a lot of these VWAP tools in Radar Screen, which means you can watch multiple symbols easily with it. What I've been trying to essentially do is I've been trying to kind of day trade to help identify like some really functional tools that work. And this has been something that's worked for me. I essentially have been trading these major stocks like, you know, NVIDIA and Tesla and stuff like that, Apple. And then what I've done is I've also done the big ETFs like IWM and SPY. And so today I just actually had a little trade when I took IWM, was holding the VWAP, I mean SPY, and I sold it pretty much when it came up to this channel. Now I want to show you something else that's interesting. Yesterday's VWAP right there, boom. That's where we hit. So here it actually shows you yesterday's VWAP. And I'm trying to create it. I don't know if I've created this yet, but if you look at the code, you can figure this out. You can make an alert, so it will alert you when it hits yesterday's VWAP. And I'm working on that as well, and I'm not sure I've accomplished it yet. But that's another thing that you could potentially have it do. There are certain times I'm trying to think of. There was a certain thing that you see this all the time, that the previous day's VWAP will become an important level. I'm trying to actually think of some places where it happened. I think XLE was doing it. There was a while here where XLE was trading in a really predictable way. The energy ETF, and it was hitting, it was basically just, I can't find it now. Well, actually, let's look at today, for example. You know, it opened at yesterday's VWAP, hammered lower, and where does it hold? It holds right at the bottom of yesterday's VWAP channel. It's pretty interesting. I mean, these patterns kind of just keep popping up. And this is why I found with day trading, if you have the indexes, and the thing I like about this set of indexes, like the small caps and the gold miners and stuff, is that they always are moving in different ways. So, you know, gold miners move a certain way based on the Fed and the dollar and stuff like that. Energy moves its own way. So there's often, you don't want too many things that are too correlated, excuse me, because then you just end up with a bunch of stuff that all moves the same way. So I wanted to just kind of point out this is where I've been creating this. The next thing is, you'll notice these are 1 minute candles. Now, when you use 1 minute bars, it doesn't know the historical values for the day. It doesn't know the values for the day. So the high for a 1 minute candle is the candle itself. So if you're looking at a 1 minute chart, of something like, Apple or something here, the high on the 1 minute quote is going to be the high in this candle, which is, you see it right here. So there's another tool called Open High Low Close, OHLC, yesterday, and I added a variation of it, which I gave you guys, which then has the ability for alerts. So this will tell you when a stock rallies. So if we actually look here, it'll tell you when a stock moves. So Tesla fell below yesterday's high, and this was today at 117. So let's look at Tesla at 117. Yesterday's high was this. Honestly, to me, this is the kind of signal that is potentially a buy, because you're looking here at, does it hold yesterday's high? Does old resistance become new support? This would be right here an example of how this signal could work. We can also sort by Tesla. Let's look at everything that Tesla gave us today. Tesla. Now this thing is talking to me. I got to turn this off. I'm going to disable the alerts for right now because it's starting to talk to me. I need to just really quickly finish. So anyway, you can sort also, and you can see some of the signals it gave you in Tesla. It rose above yesterday's high. It fell back to yesterday's high. And if you have a small number, like stocks like Team and Skyworks, normally I would not have these here, but like I said, I literally was just starting to test it. So now I'm going to start removing all these random things, and I'm basically just going to go with, my biggies that are, potentially just trading vehicles. The last thing I want to show you is this is the 60-minute chart with price channels. And what it does is you set it to a certain amount of time. In this case, it's set to 20 candles back, and it will just show the high and the low in that period. And this can show some interesting kind of support and resistance as well. I mean, let's see if you look at something like SPY here. It's just kind of interesting. This kind of shows you, wow, it hasn't actually made a new low here since Friday. That's actually what this is telling you, which is kind of interesting. These channels can be using for day trading as well. But the main thing I wanted to share was these alerts. What I've done is I've added the ability for these to talk, because it will tell you the actual symbol. Is a small change, but it's a huge change because you add this symbol, this if you want to use this syntax in the code. So those are the main things I wanted to give you guys. Is this a 5-minute chart? Is that really yesterday's high? That is a 5-minute chart. Yes, it was yesterday's high. That's Tesla 5-minute chart. This is yesterday, so this was roughly the high right here, 309 or something. So it's been pretty interesting. This sort of thing has been working. So I wanted to just kind of share it. But the VWAP channels have been pretty interesting to me. And if you look at like things like SPY and IWM and Qs, and then you want to be day trading those, they often just move between these VWAP channels. If you have those stocks and you put them in here, they can give you some nice alerts. So great to talk to everyone. That's everything I wanted to cover. I managed to get through all of it. Remember, we do have a webinar on the 12th, and I'm going to be back with you guys before that on October 4th. Great to talk to everyone. If you have any questions, don't hesitate to email me at drussell@tradestation.com. Let me know how these indicators work for you. Thanks, guys.